Welcome to the Money GPS. You came here for the truth, so let me unveil that for you. Can you believe that the situation has intensified? Everything that has been going on, we are now back at the start of 2020, that is. The suggestion here that this is lockdown 2.0 is very real. The first thing I want to look at is the escalation in prices. You've seen it everywhere. Inflation is off the charts. I'll start there, but the second part is extremely important, and that is China locking down. This is very, very big, and you know why. Because when that happens, the economy goes down the tubes. The third thing I want to look at is India and Russia's relationship, how important this has been, and of course, what's happening now. I've got all of that and more. Let's begin. Starting with this, you could see oil prices, natural gas prices, they have risen, all commodities have risen. But when we see the inflation adjusted price of oil and European natural gas, it looks like while European natural gas is the highest it's ever been, oil has been higher in previous instances. And so I always like to take anything, whether we're looking at a stock market, whether we're looking at a commodity, price it in dollars, price it in different currencies, but also in relation to something else or with inflation, because it gives us a better sense of where we're at. And that's just one way to look at what we're seeing right now. Regardless of how you look at it, it's expensive. European carbon prices and key commodities. I just want to show you the fact that if you look at coal and gas, they have accelerated dramatically just over this short period. I mean, really, when you think about it. Okay, look at wheat. Wheat futures are the hottest stock on Wall Street, and usually that's a sign that it's time to jump ship. We will see though. You could see what happened in relation to the weekly price change. Wheat has never, this chart goes back to 1960. We've never seen anything close to the spike that we noticed. But look at it. This is the long-term real adjusted price of wheat. And while you can definitely see a spike there, if you look at that in this way, going back to 1842, prices had certainly been higher. Why? Because we're able to process the commodity much better today, more efficiently today, so it costs a lot less. Here you can see the weekly movement in the commodity index, extreme to say the least. Okay, that's just giving us an idea of where we're at. All this stuff, where are we at today? Well, I'm going to show you one factor that leads us into the potential for, yet again, the beginning of 2020. Here we are. China orders 51 million into lockdown. That's not a small number, even for China. They've exceeded 1.4 billion people. 51 million, I got it. I got it. I love the comments that say, oh, I divide by this number and that number, and so you're wrong. 51 million people in lockdown. How did it work last time? They start with one city, outbreak in another city, outbreak in another city, lockdown, lockdown, lockdown. And then the whole world copied the exact same model. Are we going back into that? I'm not so sure. But I can tell you right now, this is not a good sign. So I want to bring that front and center. I want to mention that to you. If this is the case, that they do go into full lockdown and do not let up, we have a big problem for the global economy. But as I told you, what is the best way to stop inflation? Oh, that's right, a big recession. That's how you do it. You get everybody to stay home. They won't be driving the cars. They won't be needing the gasoline. Everything can slow down. Something to think about anyway. Here you can see the Chinese tech stocks. Okay, this is called the Nasdaq Golden Dragon China Index. Hit real hard. In fact, I'm going to cover this separately in another video, but you can look at even the broad indexes and what's been happening. I mean, come on, everybody. Come on. We are way down. This happens to be the QQQ or the Nasdaq. Just look at where it has been over the past few months. It's been nothing but down. And yet you're hearing constantly, buy the dip, buy the dip. Stocks never go down. Stocks never go down. If they do go down, it's just going to be 5%. It's just going to be 10%. If they hit 10% down, don't worry. The Federal Reserve is going to come in and pump it up. Oh, don't worry. 15%, they're going to come and pump it up. We are seeing stocks that are absolutely punished right now. Absolutely punished. You look at the broad indexes, they've been hit pretty hard too. Where is the bottom here? Well, I can tell you there's some serious pessimism that is happening now. And I do think what we saw with oil, I don't know if you guys saw this, it actually dipped below. If I show you real quick, it dipped below, and right now, 98.51 at the time of this recording. $98 below 100. Why? Because of this. I mean, there's many factors, in fact. A lot of that was selling off of options and so on. But I do believe this is a big factor. Now, I ranted on a little bit there, but I wanted to make that front and center. You got to know about this. And then this huge news. Huge. Russia could ban wheat, rye, barley, and corn exports from March 15th to June 30th. So I want to see what happens here. I want to look at this very carefully. You know that Russia is a massive exporter of these commodities. If they say no, because they want to stabilize their own situation, well, then what do you think that's going to do? Of course, it's going to push the price up, and you've got places heavily reliant on these particular commodities from Russia, but also Ukraine. This is real big too. Chevron set to trade Venezuelan oil if U.S. relaxes sanctions. So you saw what happened. The U.S. went to Venezuela, had a little meeting. Suddenly, they're not so bad. Suddenly, we're going to recognize the government. Suddenly, things are okay. I don't know. I really don't know. I find it interesting, to say the least. This is yet another situation. Evergreen, once again, this particular cargo ship found itself stuck inside, right here, just shows you here, Patapsco River. Okay, I'm not sure if I pronounced it right. On the way out of the port of Baltimore. Yet again, same company found itself stuck. Apparently, it went into the wrong area where it wasn't supposed to go. It got stuck. And what they said in here, it's a little bit lower, basically something to the effect of, right there, they're going to they're going to have to restrict where was it now? I'm losing it. They basically have to restrict the traffic flowing through. That's all. To me, on the image, it looks like it's basically open, but regardless, what they said was they're going to have to slow down the traffic. So this could impact what we're seeing with cargo a little bit, just to that small degree. We don't need that. We need every piece of good news possible, okay? As West shuns Moscow, officials say India eyes more cheap Russian oil. Can you blame them? Oil going real high. Russia has that big discount, and they're saying, hey, we'll take it. India's just saying, hey, you're going to offer cheaper oil? Absolutely, we'll take it. Okay? And here they're just talking about that. US officials have said that they would like India to distance itself from Russia as much as possible, while recognizing its heavy reliance on Moscow for everything else. All right, India has not condemned the invasion, and they're basically saying, hey, we're staying out of that. Okay, so there's important data in here as well, just talking about the fact that India imports 80% of its oil, but it usually only buys 2 to 3% from Russia. They're offering the discount. India is stepping it up, apparently. Russia is offering oil at a heavy discount. We will be happy to take that. I mean, that's literally what they're saying right now. I think this is key because you're going to see alliances that are real strong get stronger, and ones that were maybe a little bit weaker start to form that longer term relationship. China and Russia like this, the BRIC nations, we could see that growing and growing. How Russia's invasion of Ukraine is tearing apart the global food system. War in Europe's breadbasket is taking a toll on the world's food supply. So this is just more of what I had covered over the last little while, talking about the prices that have risen. People are pushed to the edge right now. Of course, we are going to have food riots. Of course, we are going to have detrimental reaction to what we're seeing with the prices, not just with oil, but also with food as well. It's a simple matter of fact. You can look at that. The banning of the products is just going to exacerbate that in particular countries. This is why I always say do the most for yourself. When we talk about solar panels, when we talk about geothermal, you could say, countries can't do that. They're not going to do. You got to do what you can for yourself, for your household, your family, because we can't rely on those that are, the overlords, to say the least. Argentina halts export registrations for soy oil and meal. So this is one particular commodity, and you can see what they are doing. Okay, and then you see a country like Egypt heavily reliant on the commodities coming from Russia. Okay, and what's happening? Russia and Ukraine, I believe it is. And in this case here, credit default swaps have soared. They know that they're going to be encountering problems, and this is just one of the reasons, okay? Look at what's happening right now. Employees, companies, they are suffering right now. There's no doubt about that, okay? There has been a lot of backlash on these companies. It's McDonald's, it's Pepsi, it's IKEA, all of the rest. These companies right now are dealing with political pressure, they're dealing with all this, but look, at the same time, the employees that were working there, they don't have jobs now. Okay, I don't know what all the inner workings, but I could tell you that some of these people are not getting paid and they're going to be pushed harder. And that's, I guess, part of the whole situation to begin with. And this is important as well. When gas goes up, people want to work closer to home. And in places where, the unemployment rate super low, jobs, people are trying to just, there's signs everywhere basically saying, hey, work for us, we'll pay you this much, we'll pay you that much. At this time, people can say, you know what, I'm not driving an hour to work. I can just get a job around the corner. They'll pay me more. So it's all about what's happening, with these massive fluctuations. And the only thing that could turn this around right now, of course, we have the Federal Reserve and the increasing rates, which, they're only going to do a small amount. They've already stopped the expansion of the balance sheet. But at the same time, a recession, a heavy recession, potentially lockdowns, could reverse this. So I want to see what happens. I hope you're paying attention. I hope you appreciate this information. If you do, hit that thumbs up. That's how you support this channel. By clicking a button on your screen. About 10% of the people do that. And I want to thank each and every one of you. Are you a subscriber yet? No? My goodness, why? You got to do so. Hit that subscribe button down below. I bring out videos every single day. Hard-hitting information. I'll see you on the next one.